Hey everyone, welcome. Thanks for joining. We're just going to give it another minute or so for folks to jump in and then we'll get started. Hey everyone. All right, a few more seconds here and then we'll jump in. All right. Excited to be here with everyone today and to talk vacation rental investing. It's going to be a fun topic. We've got a great agenda in store to jump into all of the details. But first, I want to do a quick introduction. I'll start and just introduce myself. I'm Ryan Frazier. I'm the CEO and co-founder for Arrived, and I'm joined by Cameron Wu. Cameron is our VP of Investments, and we've got a lot in store. We're going to start with the different ways to invest in real estate and then jump into vacation rentals, a topic that we're excited to announce today is now part of Arrived's investment offerings. Then we'll do a quick introduction to Arrived, some of the benefits of investing through Arrive for those who are curious, and then how to get started. After that, we'll take Q&A live and go from there. So to start, we want to talk through some of the different ways to invest in real estate. And there's really several different ways. One that's probably most familiar to people is just buying property directly. Hiring a real estate agent, scouring the market, and buying the property in your own name, and then potentially operating that property as a long-term rental or as a vacation property. Then you have the ability to invest in REITs or real estate investment trusts. And oftentimes when people talk about REITs, they're really talking about public real estate investments trusts, so public funds. And one of the nice things about REITs is that they do offer the ability to invest in real estate in a passive way. So you aren't responsible for the labor and you aren't out there going and looking for the investments. But one of the drawbacks is that they're not really that correlated to the real estate prices underneath them. Ultimately, what you'll find is that these public REITs start to move with public market sentiment. You see some compression in the potential yields or cash flow just because of the liquidity that they have access to. And then you end up seeing that they move in tandem with things like forward interest rates and market trends that might dictate or impact the market as a whole. And that means that they can be a lot more volatile than the underlying real estate. And then you have real estate investment platforms. And these are a new kind of way to invest that has been coming about, where it really gives investors the ability to invest in real estate online. It has a lot of the direct benefits of investing in real estate, and it also can be passive. And this is really where Arrive sits today, kind of a combination of allowing investors to pick and choose which properties they're investing in, but also still able to access that passive nature. And then, of course, there's different types of real estate, different ways to invest in real estate. You have offerings on the left here, like commercial, maybe things like a retail or office building. You have industrial, like warehouses or factories, residential, like single family homes or multifamily, vacant land, and then vacation rentals here at the end. And we're really excited to talk specifically about vacation rentals. For me personally, it's fun because the first time I ever hosted someone in an Airbnb was around 2011, almost 12 years ago now, I think. And to be able to create more access for people to act as the host, kind of be an owner of these vacation rental properties and participate in the economics, in the rental income that can come from managing these vacation properties or Airbnbs is something we're really excited about. And so why invest in vacation rentals as a category? We're also offering access to invest in single family homes and other assets. So why specifically vacation rentals? Well, part of that consideration is that they can provide great cash flow because of the fact that these are seasonal properties where people are, booking potentially nightly stays, 2-3 days at a time, up to maybe a week or a couple of weeks or a month at a time. Oftentimes they're garnering higher income, higher rental income as a result. And we found that as more and more people are getting comfortable with staying in vacation rental properties over time, the average annual revenue for vacation properties has gone up. And at the same time, there's more demand than there is supply. And so that market demand is, creating a increase in the rental income potential. It also provides a great foundation for the real estate values. So for properties that have, they're properly licensed to operate as a vacation rental, and they're in these cities or locations that are really well suited to these vacation activities. These are communities that are really looking to drive and encourage visits and people to come travel and enjoy those local economies. Well, there's a lot of market demand to stay in those types of properties. And we're seeing that continues to go up. So this is looking at the percent of travelers that have stayed in a vacation rental property. Compare 2011, whenever I was operating my first Airbnb as a host, about 10% of travelers were staying in Airbnbs. Now it's 34%. More than a third of folks who are traveling are staying in vacation rentals today. And then the last piece is really about diversification and the ability to access different types of investments, even within real estate. So overall, this is kind of a core part of modern portfolio theory, kind of the idea that a well-diversified portfolio can provide a higher rate of return for the same or equivalent level of risk. So that diversification can be an important part of putting a portfolio together for folks. And then within real estate, there are different ways to diversify. So those who are familiar with Arrive might be familiar with our long-term rental properties, where people are, they're single-family homes that people have entered into long-term leases around. Well, on the other side of the coin, we have vacation properties where there's a little bit more seasonality in the rental income. These are short-term effective leases. There might be seasons like in mountain towns in the winter where there's a spike in demand, or in areas on the coasts where maybe there's more spikes in the summer months. You get a little bit more volatility in the cash flow, but the income potential is higher. And so a balanced or diversified portfolio can start to kind of capture some of the benefits of those things without taking on more risk than you're comfortable with. And so something to keep in mind is that diversification aspect. And so then as we get into vacation rentals themselves, so it's quite a fun, topic to talk about, but getting there is really a lot of work. When you start to think about everything that's involved in finding and acquiring and setting up a rental property, things like you see here, well, it's even more a consideration with vacation rentals because of the short-term nature of those stays. And for many reasons, actually fewer people are able to access these vacation rental economics, act as a host or an owner of an Airbnb, than are able to participate in any of these other real estate asset classes. And so vacation rentals have been very exclusive, for people who are willing to buy these whole homes in these vacation destinations, and who also have the time to put in, the work to deal with a lot of these extra pieces. And so really what we're excited to do with Arrive in introducing vacation rental properties is to just make it easy for anyone to invest in these vacation rental properties, diversify alongside long-term rental properties as well, if that's what you're interested in, and ultimately not have to, put in the time or work involved in managing the day-to-day operations. We want investors who are interested in this asset class to be able to invest, to be able to participate in the Airbnb economies that have been able to be created, but ultimately without all of the barriers that are typically keeping people from jumping in. And hopefully that means that we can get people accessing, vacation rentals and the ownership side of things, maybe 5 or 10 years earlier than they might otherwise would have if they were working to save up or ultimately create the time to buy their own vacation rental properties. So with that, I'm excited to hand it over to Cameron to talk a little bit more about Arrived, how it works, and more information for anyone who'd be interested in getting started. All right, thanks.
All right, thanks, Ryan. So, I'd like to talk today about how it works, Arrive generally as a process, and we'll talk more about vacation rentals specifically. We'll talk about how we select our assets, going through the process of qualification with the Securities and Exchange Commission, the SEC. And then from that point, we'll talk about some of the benefits with investing with Arrived and then how you can get started. So, first, analyzing markets and neighborhoods. Vacation rentals is a really fun space because there's so many different markets with so many different reasons to invest. So, as we're looking at the different markets, we're looking for reasons. Why do people go to those markets? Why do travelers go in there and have a short term need and short term stay? And then from there, we buy the right homes that fit that thesis. And again, there are so many. There could be travel reasons for business, vacation, as the name vacation rental implies. And with the recent developments in the world with remote working and just the landscape, there's a lot of people that are vacation and working simultaneously. So you have a lot more travel activity in general that can support a vacation rental. So we're finding the right assets and matching it with those market theses to really find those best assets and then improve and furnish those homes. The types of homes that we're going for are unique experiences generally. So we're going to spend a good amount on the furnishing to make that unique experience. And that's what's really interesting about the vacation rental market is that you can drive so much higher revenue. Right. It's an operational model that's providing a value, a service, and an experience, and more so than just housing. When we think about long-term rentals, it's a very great asset class and operating model to be in because it provides a fundamental necessity that housing and lodging and just shelter. But when we think about taking a vacation, we can imagine the type of money that people may spend on unique experiences and that getaway from life that people have been looking forward to. So we improve and furnish the homes to make sure that we're getting the top dollar on those assets that we're purchasing that match that market's reason to be purchasing. Then comes the exciting part. We drive the bookings through Airbnb, VRBO, as well as some other more partner specific channels where we may be able to save on booking fees and those, the Airbnb fees. But primarily, it's a great driver. We're looking for excellent reviews and we're partnering with really innovative local operators who are not only providing really great themed experiences, but also complementary services that round out the vacation that are a lot more interactive and experiential, as opposed to just saying, here's the accommodation and you're living here and you're, exchanging for that. So there's a lot of interesting opportunities for potentially future revenue streams, future investment products, partnerships, but there's such a rich environment that the vacation rental market produces that we're really excited about. And then from that point, we go through our normal securities offering process where we are qualifying these securities with the SEC. You are purchasing shares of these rental homes, and we take a property, we put it into a company, and then you are then buying shares of that company, which owns the asset and thus all the cash flows as well as the underlying home, the vacation rental that you would be a shareholder of. So let's go into some of those benefits of investing with Arrived on the platform, and we'll talk about how they pertain to vacation rentals specifically as well. So passive income. It's kind of a funny term because if you've ever been in a vacation rental, if you've ever owned one, or if you've ever stayed in one, you can imagine the operations. It's hardly close to passive, but for the Arrived investor, it is a passive experience because you get the benefits of that pass through rental income and that appreciation, which leads us to our next point, that it's still backed by a residential asset. And that's the really fun and economically advantageous component about short-term rentals as an investment product. You get operating income that can outperform, right? Because we're producing that themed experience that can just really get great cash flow. But we still have a residential, single family residential asset or some sort of, townhome, condo, a desirable asset that can provide that basic necessity, shelter and habitat for somebody who's looking to buy a home or be a long-term renter as well. So the floor of the asset price is supported by really strong fundamentals, but has a nice little upside because we can provide those experiences. So in the end, we can really get great capital appreciation while earning that higher income during the life of the investment. Next is no liability debt. many of the arrived investments are financed with no liability debt that is non-recourse. So non-recourse means that you, the investor, are not personally liable for any debts of the company that you hold shares in or the properties that you own. The assets of the company are the sole collateral for that mortgage instrument. So you don't have to have the credit worthiness either to apply when you're purchasing these securities. So you don't need to be credit worthiness yourself, nor does it impact your credit in any single way, but you get the benefits of institutional quality debt programs that Arrived brings to the table. Next, no operational responsibility. As I mentioned earlier about the funny nature of the passive income within the space, moving tenants in and out, or guests, I should say, in and out every couple days, cleaning the properties, coordinating all of the logistics for, a group looking to get away and get on a vacation is no small feat. So at Arrived, we abstract away all of that operational responsibility while still maintaining the economics of that asset and pass it through to you, the investor. Which brings us to our next point. Why do people love investing in real estate? Because you can take advantage of depreciation. It is a long-lived asset, and the IRS allows you to take that non-cash expense against your revenue to lower your taxable income. It is why it has been such a great wealth generating mechanism throughout the history of our country, as you've been able to generate cash flow, defer the taxes, and really have it be the cornerstone of a healthy financial portfolio. So with our investment products and vacation rentals, you will be able to take advantage of depreciation, as well as some of those capital gains that I had mentioned earlier, with the nature of the residential assets appreciating quite, you know, quite well over a historical period of time. And then you get the beneficial long-term capital gains rate when you sell the property. So those are typically taxed at anywhere from 15 to 20% in today's tax code, whereas the ordinary income on wages and salary would be anywhere from 15 all the way up to 37 or 39% at the federal level, and tack on that additional state income tax burdens that you may have. So long-term capital gains is certainly a great tax advantage. With low minimum investments at Arrived, you get the same $100 entry price as you do with the long-term rentals. So we really see it as a great way to start diversifying into other properties. Most of our investors, they're putting their investment amounts into multiple properties. So whatever they would have spent on that one, they're allocating across multiple. So we think it's the best way to get started with a diversified portfolio at amounts that you feel comfortable with, and you can build that portfolio over time. And with that diversification, you can distribute your money across multiple properties and now across multiple operating models. So at Arrived, we started with long-term rentals and single-family residential, and now we're expanding to short-term rentals. So we're still very comfortably within the realm of residential asset classes, but now we're exploring different models. So to get exposure to some of that upside income, but really have that strong defensive thesis of why we love investing in residential real estate, you can get both on Arrived. And not to mention that you can invest all across the country, as we're currently in 20 metro areas and quickly expanding that with the introduction of our new asset class. And finally, flexibility. You can access the most lucrative markets without being tied down to the city that you live in. So there's really great advantages of investing with Arrive, because even if you can do it in your own backyard, which we very much encourage you to invest in real estate any way that you can really see the benefits, even as a seasoned investor, when you have the flexibility to invest outside of your own backyard. It's extremely difficult to run the operations, especially one as active as vacation rentals, outside of a 1 hour, 90-minute radius of where you're located. So at Arrive, we're partnering with the best partners who have the boots on the ground to be able to manage these rentals in a scalable way and produce really great returns on extremely unique assets. And this is all on one platform, right? So we are sourcing the assets, you're buying the shares on Arrived, and when you're setting up the account, you can purchase the properties and manage your portfolios all on one easy platform. So as you're registering your account, all you need to do to get started is to have an email address to register. And then from there, we ask you a couple pieces of information that are common with all investment products, such as personal identifiable information, help with taxes and identity verification, as well as connecting a bank account through a trusted third-party platform called Plaid, which if you've ever connected a financial service to any particular endpoint where you're transferring money, chances are you've interacted with Plaid. So, we maintain security and have a great platform. And, from the time that you register to the time that you're buying your first or 100th investment property, we timed it and you can do it as fast as about 4 minutes. From there, browse your properties, select the investment amount in whether it be a long-term rental or a vacation rental, and then select your shares. And from there, you start collecting your income in the best access platform to real estate today. So really appreciate your time and attention. Thanks for attending, and we are ready for some Q&A. So thanks for attending.